Managing and improving your cash flow requires a comprehensive financial system and understanding of your comprehensive financial statements. So we just talked about the income statement and how to improve your net income. But a big part of managing cash flow also is understanding and managing the balance sheet. So that's what we're going to take a look at. I just want to make sure you have a basic understanding of the components of the balance sheet. And then we'll get into actually managing your assets and liabilities to have an impact on improving cash flow. So let me minimize my mug here and bring in a balance sheet. And let's just take a look at the components of the balance sheet. The basic balance sheet formula are assets equals liabilities plus equity, or assets minus liabilities equals the equity you have in your business. Not unlike the mortgage on your house. Your house is the asset. Subtract from that the mortgage that you owe the bank, and that's your equity in your home. Same concept for your business. You have assets in your business. You have liabilities in your business. The difference, hopefully a positive, is your equity in the business. So the assets are everything from current assets, those which are liquid, supposedly, technically, within the next 12 months, they can be turned into cash within the next 12 months. And then you have long-term assets, fixed assets, property, plant, and equipment, and intangible assets. We're not going to spend a lot of time talking about intangible assets. The same is true in your liabilities. You have current liabilities, those liabilities that you have to satisfy and pay out within the next year, and long-term liabilities, like some notes payable to the bank on equipment or buildings or whatever you might have a note payable to the bank on. The long-term portion is part of your long-term liabilities. So what are the key components of the balance sheet that you need to manage? For most small business, on the asset side, in the current assets, it's two accounts, your accounts receivable and your inventory. If those are mismanaged, they have a huge impact on cash flow. On the liability side, we want to make sure you're managing your current liabilities, paying out when you have to pay out, not letting go of cash too soon, and also maybe looking for and analyzing terms with your vendors and creditors, and working on getting better terms so that you can pay out cash slower. And then also let's look at, or what you need to look at is, are our long-term liabilities the right type of liabilities for what they're financing? In other words, you don't want to have a line of credit to finance seasonality in your business, downturns in your business, and then have the bank talk you into turning that into a long-term note payable. So that's the balance sheet, the basic components of the balance sheet. And next, we will get into actually getting more detail into managing the balance sheet and managing those accounts to improve cash flow. If you found this to be helpful and you'd like more information on managing and improving cash flow, click the link below to get our business owners comprehensive guide to improving cash flow, or check out our website. You'll find it there.